Okay.
I'm gonna mute myself and take it away.
Let me get the chat set up just in case. Can everyone see my screen? Coolio. So today we're going to be discussing two indicators. The first one is going to be TTM squeeze, and the second one's the stochastic slow. We're going to go over them, and then we're going to do some real life examples. Now, if you don't know what the TTM squeeze is, it's an indicator that is a volatility indicator. There's a difference to how to read them. I'll just kind of just go over like step by step how to read the actual squeeze, because sometimes it's a little like weird for a new person to look at it because it's just random colors, right? So what it is basically when it's squeezing, it's kind of just telling you that it's about to break out, and it's your technical analysis. Like it's not going to tell you what it is going to do, either bullish or bearish with the squeeze. So, but it helps with an indication, knowing that something is in a squeeze, that clearly it's either going to go bearish or bullish. So it kind of just helps with a different, crutch per se, an extra confluence. So when the dots are red, it's in a squeeze. So these are the green dots. So it means they're firing from the squeeze, and then the red dots mean they're squeezing. So another quick tip before I go into that, when a stock is in a squeeze, so when they're in red dots, the premiums on the contract are cheaper. So it's always good to potentially get in before everyone else. So if you see a squeeze happening and you think, it's a good indication and it's a good confluence to get into the trade, feel free to get in. Just do a starter size though. Don't go extremely heavy, but it'd be a great place to, start. And then once the move actually happens and it's confirmed, feel free to start sizing in. Just for a little tidbit about that. So the red dots, when you see these dots down here, these are green, so these are all firing. But when they turn red, that's when it's actually like squeezing and about to do something. And then the green is when it fires, right? So it's used to see large momentum shifts. Generally, the squeezes fire in a typical trend. Like they usually don't like to break the pattern. The blues are bullish. The red and yellow are bearish. And if you look, it kind of just does the same pattern over and over and over again. The light blue means like the teal is like the largest bullish volume, like the bullish momentum volume. And then the dark blue, it's still in an uptrend, it's still bullish, but the momentum and the volume is starting to die down, right? And then the actual red indicators are when it's starting to turn more bearish. So red and yellow are bearish. The red kind of just the exact same thing. It's flip-flopped. So the red is a lot of bearish volume and a lot of bearish momentum, right? And then yellow, it's still in a bearish sentiment, but it's kind of starting to die down with the bearish volume and the bearish momentum. And then pretty much does the same exact thing in the cycle. The next cycle would be blues, which would be a bullish sentiment, and then red, and then yellow, bearish sentiment, blues, right? So what does all that mean, right? How do you put this together? So just for a quick example, this is from Bitcoin a few weeks ago. This is when it had a tiny little squeeze right here, nothing major, but what the green dots are indicating is that the squeeze is being fired. And then if you look at it, the volume is coming in, so that's another confirmation. So the large volume's coming in and the squeeze is being fired to the upside. So it's a bullish squeeze being fired. And look at it. So if you just put your cursor right on up, so you could have got in right around this general region, right? And then firing from the top of the squeeze to the bottom. So the bottom to the top, this is a $300 move for Bitcoin. And then it finally starts dying down around here, and you can see it on the chart, right? So the momentum is dying down, so it's starting to turn dark blue. And also it's another indication because the volume is starting to die down, right? So large volume and light blue on the squeeze firing is a great indication to get into a trade. Also, another confirmation was Bitcoin, this is a 50-day moving average. Usually 50-day and 200-day moving averages are large institutional buying and selling. So that's just an extra confirmation. So it bounced off here and then rallied as soon as the squeeze started to fire with volume. And you could have caught that either here off the 50-day EMA for, like teeny bit more riskier play, or wait for the full confirmation and still get a very large move. Does that make sense, guys? Do you want me to explain it a little bit more slower? Any questions about this? I'll do some real life examples, but I kind of just want to go over stochastic as well first, and then we'll just jump into some examples. Can you play the dots? Yeah, sure. So the green dots mean the squeeze itself is firing. Now there's no actual red dots on this example. I'll show you that in a real life example in a little bit, but just pretend that these dots were red because at one point they were red and then they squeezed. So that means they fired. So those red dots turned green and then the move actually happened. So like in real life time, you'll start seeing red dots appear, right? Like right where these green dots are, they come red. And then that means the stock is squeezing. So it's consolidating, right? So like if you look at it, like in this general region where it's not really doing anything, this is the price action showing it and reflecting it. It's pretty much consolidating, kind of just chilling, a little bit of balanced market, right? Because, and then it's your job to tell, is it going to go up or is it going to go down? In this case, it's going to go up because it bounced off the 50 moving average and the volume's coming in, right? Yes, they should be. Yes. I don't really use the B&B setup, but I'm pretty positive they're probably the exact same colors. Usually TTM squeeze is usually red dots and green dots. And then the actual coloring schemes of the TTM bars, it's kind of just, up in the air. It depends on personal preference. This is just how I keep my color schemes, but I've seen different types of color schemes depending on, like your own personal preference. But the actual dots themselves usually stay the same. Red being in a squeeze, aka like a consolidation period, which is right here you see. And then green actually firing from that squeeze to either the upside or the downside. Does that make more sense? Does TTM squeeze still work if it only shows big green dots on trading view? Yes. Yes. Because like in this example, I screenshot this and technically speaking, none of these dots were actually red, right? But it still had a very large momentum move. Sometimes the red dots don't really show itself very much because sometimes the move is just really quick and really violent. And then other times, stocks can be a little bit slower. So you can see multiple like red dots, right? You can see multiple red dots. So it's kind of just consolidating for a long time. And then it's either going to go to the upside or the downside, right? Now, another quick tidbit about the actual squeeze indicators. Typically and historically, there's about 7 to 10 bars. So what that means is like each one of these momentum bars, usually there's about 7 to 10 before the squeeze is over and or starts dying down, right? So that's just a good indication so you don't get faked out. So like say if this is a fresh squeeze being fired and you're only in like the second bar, you don't have to get faked out then because you know that there's going to be a few extra bars. Because like say if you're just right here in this example and you see this large, red bearish volume coming in, and you're like, oh goodness, what if I sell here, like right here, right? But then you shouldn't get faked out, because you understand that these bars here, like the actual momentum bars, there's usually at least 7 to 10 until it's done. So try to like hold, it basically allows you to hold longer, if that makes sense. What does firing mean? So firing, it'll look a lot better when I show you like actual examples, but when it goes from red to green, basically. So red is what this would look like basically on the actual price action, consolidation. These are consolidation periods. So then the actual firing, which would turn the red dots into the green dots, right? So the actual fire would be right here. So the green dot turned into the bluish momentum volume for the TTM squeeze. I'm not sure you answer this, but what time frame is best? It really depends on your actual, like trading style per se. If you are a swing trader, TTM squeeze is 100% used for like monthly, weekly, daily, 4-hour. Because if you can find, because like I said before, if you can find like larger time frames hold more merit. And if you can find a weekly or a monthly squeeze being fired from that, like you can get an extraordinarily large move in your favor if you catch it early. You can get a very large move. So utilizing the TTM squeeze on larger time frames is really awesome. Now for day traders, you can use this, also personal preference, but personally for me, I usually use for specifically day trading, probably sub 2 hours. So like I see if there's any squeezes coming in on the 1 hour, the 2 hour, and then I move down to the 30-minute. You can even find like 5-minute and 15-minute squeezes. It all acts really great, but the higher the time frames hold the most merit. I just use the regular default settings, Anthony, for the TTM, the exact default settings on both TOS platform and TradingView platform. I use TTM on both brokers. Mara on the 5 minutes doing it right now. Yeah, Mara was a great example of it today as well. Mara and Riot had a very nice squeeze move in the morning. Same thing with NVIDIA. NVIDIA had a 25-point rally, basically, right off the demand. If you saw that at that, well, I think it was like 5:15 demand zone, you picked it up, you could have rode it all the way to about, I think at the high was 5:26. So TTM is great, especially for day trading and the overall like swing trading, because if you can get in like over a break of consolidation period, like a ranging period, and find a squeeze, you can swing that for quite a while, and it just allows you to hold longer. So let's go over to the stochastic, and then I'll jump into the actual like real life examples, and hopefully it makes more sense. I'll check up both Facebook and Mara for you guys to look as well. Oops. So stochastic slow. What it is, it signifies a shift in momentum. And it basically allows you to get in before everyone else, right? This allows you to know that there may be a shift, a potential shift. Sure, I got you. I'll do DraftKings, Facebook, and Mara. So when you see a crossing, when the momentum has been bearish and it crosses up, so in this specific example right here, you get a shift in momentum. So once you see that the red line right here has crossed the actual purple line, it means that the momentum has shifted. In this specific case, it has shifted to the upside and then to the bullish side, right? So that means this specific shift indicates a potentially strong buyer pressure coming in. So, which is a very good indication, because as you see, it made a demand zone right here rallied up. It's right near the resistance of 569, and the volume starting to come in, and the stochastic is crossing up, signaling a shift in momentum is potentially possible. So this will be a good trade to potentially take, especially over that resistance. So it kind of just helps you get in before everyone else. And if you can get in before everyone else, your contracts are cheaper. Because once this move actually starts happening and it breaks over the resistance, people start funneling in and the contracts start getting a little bit more pricey, which is fine. But if you want to be cheaper and have a little more of a drawdown, so you don't really risk as much, utilizing the stochastic slow and the TTM squeeze to signify like shifts in momentum and potential breakouts are awesome, because you can potentially save yourself some money, which is always fun. So you want to make sure that the momentum confirms before you get in. So when you look at the momentum indicator on the bottom, that you see there's a line like they're crossing. So if they don't cross, that's not a confirmation, right? So like specifically in this right here, if you look right here, when this comes off, that hasn't crossed yet. So that's not really anything at the moment to look for, right? But when it actually crosses in this highlighted area, that's a shift of momentum as they actually cross. This is a lot easier to see. So like this first example right here, they crossed down, right? So that's a bearish move down. And you can see it on the chart. If you look right on up, it crosses down. And then as soon as it starts crossing down, the actual price action follows it and goes down with it. So it's kind of just telling you what's potentially about to happen before it actually happens. Same thing here. If you look at the line, the actual crosses up, signifying a bullish sentiment, right? A bullish momentum change. And then right as soon as this cross happens, the price action continues up, right? So it allows you to get in earlier and make more percent profits on your contracts because you're getting in before everyone else. Does that make sense? Awesome. Let's go to actual real life examples real quick. It will probably make a lot more sense. Just give me 1 second. So, okay. Let's do this one. It's probably the easiest to see. So we wanted to do, which one do we want to do first? Mara. You said the Mara on the 5 minute. So yeah, if you look at it, see like squeeze happened to the downside right here, starts to fire. And if you look what happened, large volume, squeeze is being fired to the downside. The red is large bearish momentum, and then just watch what it's doing. If you look at it, it's all the way down here. And then it finally starts cutting off with some yellow. So that's a little bit less bearish momentum, right? And you can see it here. The buyers are starting to step in, right? And then finally, the buyers finally stepped in after some consolidation and choppiness for about 30 minutes, right? But if you took this trade and you saw the squeeze happening, you saw the rejection of the 54 level. So the 54 level, you could have taken this trade all the way down to at least 51 or 50-60, right? So, and you could have just taken profits along the way. Like if you took multiple contracts here, you could have taken profits at this region at 52.75. You could have taken profits at 52, and you could have took full profits down here at 51, right? And if you look at it, it's kind of harder to see since my volume is showing, but it actually follows the TTM and the stochastics, because like it crossed down right here, officially crossed down, and then the price action comes with it. Now the TTM in this case actually was first to the game, and then the stochastics officially crossed down right here. So stochastic was crossing right around here, and the actual TTM told you about the move right here. So it's about a dollar or so prior to the stochastics. Now, same thing, let's go to the upside, right? So after this choppiness, the actual crossing happened here. So before the TTM in this case. So this one happened in this area right here, right? So it's telling you that something might happen, the shift in momentum might happen, and it's still technically bearish on the TTM squeeze. And then finally it gets fired to the upside for a bullish momentum. It wasn't strong. It wasn't very strong though. Like if you look at this one, this was straight teal and then dark blue. This one was kind of just choppy teal and dark blue. So it wasn't very strong because the buyers weren't really present here, right? Because you can see it in the lack of volume. There wasn't very much volume here. The buyers tried to push it up around the 52, and then they got rejected off the 53.20. But still, this is still a $1.20 move that you could see right off just only the stochastic. If you got in here at the stochastic and you got in right at this break, you still could have got a dollar and almost a half move, right? And then look on the same thing. At the top, it's starting to shift downwards, right? So in the bearish, it's starting to shift downwards, signaling a bearish move. So right here at the top of the rejection of 53.20, it starts to actually become bearish right here underneath the newfound resistance of 52.75. And then you could have taken that for a quick little trade down to the 51.50 with the respect of the trend line. And then right at the respect of the trend line, it starts to bounce off, have a little bit of bullish sentiment with the teal. And then this one in this case was also earlier than the stochastic again, because it's showing you that the teal momentum is coming up, and also the crossing happens a little bit after, but still only about 10 minutes later, so it's not too bad. And then the actual full cross has happened right here with the EMAs crossing and the VWAP being crossed. The white line is my VWAP, and the 21 is yellow, and the 8 is green. So everything fully moved right here, like they crossed. But you could have got an early entry right off the actual trend line, because that's a very strong bounce, right? Same thing with this one. This was also a very strong bounce. So you could have got in a teeny bit earlier than everyone else, because most people probably got in right here after the crossing, but you could have got in a little bit sooner. Your contracts wouldn't have been not that expensive. Well, let me just read questions real quick. So it seems like the stochastic lags more than the TTM. TTM seems like an excellent early indicator. Yes, the TTM is super, super awesome for early indications. And the stochastic kind of is a little bit more lagging, especially on smaller time frames like the 5 minutes. But if we look at it probably on like the 15-minute or something, it might be a little bit cleaner to see. So yeah, that's actually before the TTM. Like if you look at it, here's the crossing right here. And then the actual TTM fired right here. So they didn't even tell you, the TTM on the 15 didn't tell you about it until right about, after a 60-cent move down. So it depends on the actual, time frame you're looking at, because different time frames show you different things. In this case, the 15-minute, the stochastics actually showed you before the TTM, but on the 5-minute, the TTM showed you before the stochastics, that first initial move down, right? So you just kind of have to like look through the different time charts, because each time chart tells you something differently, if that makes sense. And let me read another question. I thought that if the two lines on the stochastics are running closely together over a long period of time, either above 80 or below 20, that signals a continuation of the current trend. Yes. So let me try to find an example real quick. So Not really a good example yet. Hold on, let me find one. So right here is probably a decent example. So technically, most people that don't understand this actual indicator would consider this area to be quote unquote overbought, right? So they would sell like right here. They would start selling like right in this area right here because it's overbought. People are going to start coming in soon, blah, 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 blah. Sure, you can get out here, but if you have time on your side, what's not to say you can't just hold a little bit longer and potentially get out up here, right? So that's an extra $6 just by holding it, because technically speaking, there was no sell signal here. There was absolutely zero sell signal. There was a little bit of, profit takers and sellers right here, but this level held perfectly fine. 47.50 held, and it didn't really cross underneath the 8 EMA very long. So a true sell signal did not happen here. So in this case, you could have saw this, but just know that if it's above 80, that does not mean it's overbought and you should sell it immediately. Don't just sell it because it's above this line, right? Because technically speaking, it did not cross anything at all. Like there was no bearish consensus. The only bearish consensus was right here and this candle only. But there was no actual sell signal. The actual sell signal did not come in. So if you held that and you didn't get faked out, you could have been rewarded even more, because the next day it actually went, like it had a teeny bit bearish momentum shift, but there was no sell signal. So if you held that, you would have been rewarded, because the next day there was a lot of volume coming in and there was an actual shift in momentum from that bearish undertone to a bullish tone right here with that crossing, right? And you would have been rewarded heavily, because if you rode this to the top, even like not even the top, even if you rode this to right here and sold, you still would have got an extra $4. That's a large move, especially how many contracts you could potentially use, right? Dumb question, but how did you remove the blue volume bars on TOS? So you go into studies, edit studies, and then volume. You can just use your volume bars, either take it out or put a different volume bar in. There's a lot of different, volume. So you can just play around with it. I usually don't use the traditional volume bars. I just have my own script, but you can just play around with it in your studies. There's a lot of volume indicators and volume bars. And also you can change the colors around and whatnot via like the settings. So say if you use XXX, volume, then you can just change the colors. Yeah. Yep. Trent's got it. You just hit the gear and you hit the chart settings, and then you can just change the colors and stuff. So, but I hope this is starting to make sense with the actual like TTM and stochastic, because these are very powerful, especially on the larger time frames. Because if you can see these shifts in momentum and the actual squeezes like presenting themselves, also just for like even more, if you look at it, there is no sell here. The only sell indicator was this red bar only. But if you look at it, this is profit takers. This is straight profit takers, because the stock just ran, $20 over a small amount of time. So these two candles were profit takers. And it even tells you on the TTM that yes, the dark blue is coming in, but that means it's still bullish overall. It's just a little less bullish momentum coming in. So these two candles are just profit takers. And then it held true on the 47.50 level, right? So that's a great thing. So most people would probably get faked out here if they saw this. But if you understand how the stochastic works and how the TTM works, and just, basic like supply and demand, right? You wouldn't have getting faked out here. You would have potentially made a lot more gains by just holding it for one more day. And then finally, the next day at open, the buyers tried again to push it up, but found a very hard resistance at 58 25, right? They found a hard resistance. And then finally, the TTM is completely dying down. The bullish momentum is not really present anymore. You also see the cross at the bearish cross right here. So basically right at the beginning of the day, right off that hard rejection in the pre-market, the shift comes in and presents itself right at the beginning of the day. So you could have taken that trade right either at 54.60 or at 53 for like a safer trade, and you could have rode that down all the way to 51. So you could have got a few dollar trade off this day trade here just because you saw the stochastic crossing downwards and you saw that hard reject off that 58.25 level. So that's Mara in a nutshell. Also, Mara's starting to cross down now. So what does that mean? If this 50-70 region cannot hold itself by the end of the day, that Mara could potentially open lower tomorrow. So just keep that in mind with this crossing right here. It's having a trouble reclaiming the VWAP and staying over the 52 region. So it has to stay over 52 by the end of the day, or we could potentially see a reclaim of about 49.55 either by the end of the day or tomorrow. So just keep that in mind for Mara. I think the other one was Facebook you wanted to talk about. Let me look at Facebook. So Facebook, we'll just start it on the hourly. We'll see if let me clean it up a little bit for us. Clean it up a teeny bit. Okay, so it's starting to squeeze right here, a very short squeeze with that red bar. See how see these bars are green, right? These are green, these little tiny dots. So that means it's fired already, right? And then this red dot means it's squeezing, right? So it wants to do something, but it's having the actual price action is having trouble. The sellers are bringing it down at the 313 level. So it really needs to break above the resistance by the end of the day so we can see another move up, right? So there's a supply zone right around here in the 312.70, 312.90 region. So it has to break above that to see a little bit more gains, right? But the sellers don't really want it above the whole 313.50 level just by these wicks alone. These wicks are large. Like that's a lot of selling volume for all of these wicks. But also the buyers are trying too. Like these buying wicks are relatively strong too, right? So it could go kind of either way. It just depends on how NASDAQ and SPY holds up at the end of the day. But let's just try to do like the bigger picture here quick. So let's do it. Let's do the straight daily actually. So right here. So it goes from bearish undertone and basically just consolidating right here in this area. That's just straight consolidation. And then finally, the volume starting to come in, and then the actual squeeze is starting to fire right here. Right here. Right here. Right? So, but the actual stochastic, if you can see that behind the volume bar, was starting to cross here. So it basically told you actually an entire week prior on the daily that something was potentially about to happen. Now it didn't happen right away. Now don't, just because a crossing shows you something, don't just blindly jump into a trade, follow price action. But it told you early and it ended up doing something basically the next week, right? So you could have technically got into this trade with a crossing right here. With this EMA crossing and making higher highs and higher lows, this is a good indication. This is a good swing trade. So the actual TTM showed you basically the next day after to get in. And then the stochastic told you a week prior, but the actual confirmation came in right when these EMAs are crossing, right? So you could have got in here right at that level. Oops. Right at that region instead of the TTM. So you could have got in probably, if you want, depending on like where you would get in at, most likely around here. So you could get in about $1 or $2 before the actual TTM alerted you. So it's still pretty significant to get in that early, right? Because that's your premiums on your contract are not that juiced yet. But when people are starting to get in, because this is buyers, like this Dragonfly Doji candle, this is a reversal candle. So like the buyers basically bought this up right from 263 all the way to 269. So the buyers are funneling in. So that means your contracts are going to get more juiced, right? So if you're in this whole mess, your contracts are going to be more expensive than if you were got in a day before when no one was really, the volume wasn't as heavy and there wasn't as much interest in that specific contract. So in this case, it's a good indication that because the Stochastic told you a week prior, and then you got a confirmation, a true confirmation before the actual squeeze is being fired. And then when the actual squeeze is fired, look what happens on the daily. So this is the daily time frame. So the actual squeeze is fired right about here. And if you get in just right here for let's just say 270, right? You could have rode that up to the high right when before the crossing happened and the light or the dark blue momentum starts to come in. You could have rode that up for $30. This is a $30 move that you could have caught on Facebook in pretty much 1 week's time. That, especially if you're on a smaller account, the $30 move for Facebook is huge. Like that's a lot of percent gains. So all you need to do is recognize these moves, find the confirmations, and then just buy enough time. Because if you bought like a bi-weekly on Facebook just to give yourself enough time, you would have made bank, especially if you bought a few different contracts. You would have made bank, right? So never underestimate like the TTM squeeze and the Stochastic on larger time frames because they're awesome early indicators. Because technically speaking, you had a little bit of a sell-off right here, but it still made a higher high, right? Because it started the uptrend right about here. Whoops. Started at the uptrend right about here. And then it bounced off the daily trend line, making a higher high. So this is just profit taking, right? This is just a little profit taking after Facebook ran $30. It rejected off that 300 level, respected the daily trend line, making a new high at 277, and then basically just went back up, right? Because technically this was just profit taking. So you could have got in here, sold for here. Could have even technically, if you wanted, you could have flipped your bias, rode some puts down, and then caught the move back up. So you could have taken one trade here, 2 trades here, and then 3 trades here. Because if you got back in at this daily trend line respecting, you could have got in, let's just say, even if you got in here at 280, right? You could have rode that back up to 310. So that's another large ass move and over, basically 1 to 2 weeks of time, right? So it always pays off to look at big time frames for these indicators because you can catch yourself making a lot of money potentially if you are correct and if you get the correct confirmations. So just keep that in mind. Keep that in mind because these are like if you played Facebook over the last month, you would have made a lot of money. So let me look at Netflix. Someone's asking about Netflix. So Netflix on the hourly. Let's check it out. So, yep. See these red bars, red little dots here? That means something's squeezing. So that means something's about to happen. So in this case, on the hourly, just by looking at it quickly, the 8 is crossing under the 21 and it's having a trouble reclaiming over the supply zone. So this whole supply zone is from 555 to 553. Okay, what does that mean? This large supply zone is where sellers are sitting. If you look at it, it's pretty choppy around this area, pretty choppy, right? So that means sellers don't really want it over this area. And when they did come above the area, they came over the area briefly, and the sellers just brought it back down. These wicks, these are selling wicks. Those are some hard rejection selling wicks. Also, keep in mind, 558 is a weekly resistance level. 557 is a monthly resistance level. So Netflix needs to have some heavy volume to get over these levels because the sellers don't want it up there just yet. Also, it tried to bounce off the 551. It bounced. The buyers could not reclaim the 555. And then the sellers came in and they've been bringing it down ever since. So it needs to hold ideally at this level, or if not this level, at the 551 level for a potential bounce back up, right? But in this area right here, the 555 to 553 region, I would not take trades in. I'd only take trades either down here for a buy the dip situation. By the way, don't size in heavy. Do a starting size here. Do like 1 to 2 contracts, and then start making your way up when it actually, having more confirmation. You have like a crossing of the EMA, more volume. That is when you want to size in. Don't just size in, oh, I'm going to buy the dip. Let me buy 5 contracts. Well, okay, what if you buy here and you end up going down the next support? So you would have lost $2 immediately if you tried to buy the dip, and the dip ended up being right here, right? So if anything, if you want to buy a true dip, buy it here. This is another weekly support level. So maybe start a position here. If it doesn't go your way, potentially average down right here. And if it comes underneath the support level, well, your trade is pretty invalid. Just get out there, take the L, right? But don't heavy size in just because it's a dip, because that dip could just keep on dipping. So those are just some forewarnings about Netflix. So you could take this trade right here or right here, or over the actual supply of 555.50, because this supply is pretty heavy every single time. Like that's a rejection, that's a rejection, 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 all right here, rejection, right? Different lines for weekly versus different line. Yes, yes. So the way I like to do it is, so these dotted lines, those are daily levels, right? This larger dotted line is a weekly level, and this actual hard line, that's a monthly level. So the larger the time frames, the larger resistance and or support. So let's see let's see see here. So if you look at it, every single time it came over, like this is a daily on the, this is a monthly resistance. So 1 time it rejected, 2 times it rejected, 3 times it rejected, 4 times it rejected, and it rejected 4 times. And then like this is years ago. Like this is not years ago. What the heck am I saying? This is like months ago. This is like 3 months ago. And then after that large rally, it hasn't been able to reclaim over here. Like after that rally, it hasn't been able to reclaim this level yet, because it rejected 1 time, 2 times, 3 times, 4 times. It's a very heavy level up here in the 565 and at the 555, 560 region, right? So just be wary of that. Don't just get into, aimless out of the money day trades unless Netflix has heavy volume, because it's been on a run lately. Like it hasn't really, had a cool down. If you look at it, it's been running for almost 3 weeks nonstop from 496 to its high of 560. So it needs a tiny bit of a cool down period, right? And the potential cool down period would be at a buy the dip scenario of either 549 or it got picked up here at 547. So just keep these levels in mind. Keep 555, 549.50, and 547 in mind for some buy the dip regions if Netflix cannot reclaim over their supply, right? And I think we want to do CRM. Let's do CRM. Actually, hold on. Let me just show you the actual TTM real quick. So TTM, buyers, tells you about it here. Tells you about it here. So basically it tells you give or take the exact same time frame on the daily in this case. And also it happened a tiny bit after, but you get a full confirmation right here when you get a daily crossing. So in this case, it was a teeny bit before the actual full confirmation, but it all kind of lined up perfectly. So you could have taken this trade, give or take about, I don't know, five, let's just be generous. Let's just say we got in at 525, right? And he took the entire trade, you got a 1 to 2 week swing. You could have made at least $25 on this trade by just seeing these confirmations. One confirmation, that's one confluence, the squeeze being fired into a bullish uptrend with bullish momentum. The volume starting to come in a bit. The stochastic is crossing upwards, signifying a bullish trend. The actual full confirmation is when the 8 and the 21 EMA moves and crosses each other. And if you want to be, this would be a risky trade. A risky trade would be basically right about when the full crossing happens. So about 524. A safe trade, this was used, this before the green was, in this case, was red, right? This was actually red beforehand. So a safe trade would have been over this supply at 531. But considering it ran through the supply, it is now a demand zone, right? So a safe trade, even if you wanted to be safe, you could have got in at 531 and still made $20, right? You still could have made $20 for safe, and you could have made almost $25 for risky, right? So these indicators are very powerful to use, especially on larger time frames. So let's do DraftKings next. I'll do one extra ticker, and I'm going to take some questions, and I'm probably going to end it. So give me an extra ticker, and I'll do that one after DraftKings. CRM, gotcha. So DraftKings, I know they had a little bit of a fall recently. Same thing with all the betting stocks. I know MGM and Penn also fell, but if you think about it, so it rallied from 55 to 75, give or take, almost uncontested. And then the selling pressure started to come in of people wanting their profits, right? People wanted their profits. It actually made a higher high, right? So it started its uptrend at about 54, ended it at about 58. So as long as this level can hold at 57, we should be okay for a next leg up. It just has to hold around this level. And at worst case scenario at this level of about 56. So 57/56 has to hold for DraftKings to see more upside. But it's starting to come, this is a nice reversal candle right there. So that's a pretty good indication already, especially on the daily. You get full confirmation of a trade over the EMA of $61, but you get some decent confirmation over $60 right here. That's an extra resistance level. Also, the stochastics, I don't know if you can see that, it's starting to curl. It hasn't crossed yet, but it's starting to cross. So let's look at it on the 4 hour. The 4 hour, same thing. The volume is coming in. So the buyers wanted it and they were interested with it at 67 region, right? That signal, you can see that just by the large volume coming in. Also, the TTM bearish momentum is starting to die down. The yellow is a good sign for us, right? Also, the potential crossing of DraftKings on the 4 hour is nice. So as long as DraftKings can hold ideally above the daily high of about $60, give or take, 59.60, that would be a good indication to potentially swing some DraftKings calls. Because the sellers brought it all the way down, and then the buyers brought it all the way back. So the buyers did not want it under 57 today. So just look how DraftKings closes in the next hour or two. And if you see it over 59.90, that'll probably be a pretty good indication for a swing. You could swing it to easily, first profit target would be here at this resistance, be a soft profit target right here, 1 touch, 2 touch, 3 touch. So your first profit target would be at 60.85, right? And then your next profit target would be actually at the harder resistance at 62.45. So you could swing this for potentially about a $2.50 gain, right? And if you bought time, if you buy a decent bit of time, your next profit target would be here, 1 touch, 2 touch. So it'll be right about here, right? So you can make a decent bit of money off DraftKings if you buy time, especially with, sports coming back, ramping up with, betting being more and more not looked down upon per se. So DraftKings is at a decent area for swings. They found a good support if they can hold, and they have a lot of upside. So definitely keep DraftKings on your watch list, because over 65 has room to go to at least probably about almost 70, actually 67, 70. So DraftKings would definitely be potentially a good like monthly swing to check out. Yeah, well, every time states pass sports betting, DraftKings and Penn, which is another one, a betting stock, they kind of run together if you look at it. Penn had an all-time high, rejected off of it really heavy. Same thing with DraftKings. They've hit an all-time high just around the exact same time frame and rejected off of it. So DraftKings and Penn move pretty similarly. MGM is kind of new to the betting game, but they're starting to get into betting as well, like online betting. This is their old high. And right when DraftKings and Penn had their rejection, this is what happened to them, right? They in this case, MGM ended up rebounding quicker than Penn and DraftKings. But check this out. They fill its gap. That's a gap that they made. The market filled that gap and created a bullish hammer off the 21 EMA, and it hasn't done a cross yet here. So technically there's no bearish sentiment yet. The only time if it's bearish if these cross down. But if this crosses back up in the next day or two, you could potentially see some more movement with MGM to at least all-time highs of 43. So keep that one on your radar too. MGM is often overlooked because they run a little bit slower, but they actually rebounded quicker than DraftKings and Penn. So definitely just keep that on watch. So let's do one more real quick. CRM. Sorry, it's a little messy per se. Let me try to make it cleaner for you guys. One sec. So same thing. All these green are demand zones. These red are supply zones, and the larger. So this is a monthly, and then these are kind of just dailies right here, and then up here are more weeklies. So it's been kind of, if you look at it, it's been kind of just ranging per se in this region. And also it likes to range in this region as it's doing kind of right now. So it has to ideally break over the last, it has to break over 22320, which it respected and bounced off of. So as long as it breaks over 233.25 region, we could see some upside to probably up to 236. So let's look at it on the little bit smaller time frames. So same thing here. TTM showed you, sorry about the early entries for Mara. Let me turn that off. It's probably annoying after a while. Let's do, I don't know, Piton, so you don't get much. Anyway, sorry about that. So if you look at it on the 4 hour, it tells you right as it happens. This one had no bearish undertone. It didn't even cross. It crossed back here, technically speaking, and then didn't make any crossing here either. So technically, you could have got in earlier than the TTM squeeze. You could have got in if you wanted to over the daily high, which would be about here, because the crossing happened here, technically right about in this region. You could have swung this if you wanted to be risky at the daily high. So you could have swung it at basically 210 before the TTM indicated right here at 211. So I told you about it about 211. So $1 after the stochastics, but still, it's still alerted you pretty early, because right as the TTM is squeezing to the upside, the EMAs actually crossed upwards, right? So this is a great trade if you spotted this, because you could have got in right here. So a risky trade would be at 410 or 411. A safe trade would be over this now support, used to be resistance, but is now a support level at 213. Even if you were safe at 213 and took it right here, you still could have made, if you bought a swing, you could have made a decent bit of money. You could have made, even if you sold right here, that's almost an $8 trade. But if you didn't get faked out, and if you had more time, if you bought like a bi-weekly, you could have held this thing all day. You could have held it to 230 from 213. That's a $17 move, basically uncontested. Like there was really no selling, because if you look at it, it pretty much respected the 8 EMA the entire way up, like literally the entire way up. So TTM squeeze plus stochastics plus the EMA crossing, those are some deadly indicators to look for. If you couple that and you play with that in your trading styles, but you don't, this is key, don't rely on them, or make sure to have confirmations. You need to have confirmations before you get into a trade. Don't just blindly get into a trade because an indicator is telling you, oh, it's firing from a squeeze, get the heck in now. No, don't do that. Make sure you have other confirmations, because what's not to say, because TTM squeeze, I'm trying to like glorify it as working 100% of the time. No, this does not work 100% of the time. This works historically in my back testing anywhere from 75 to 85% of the time, right? This is still very highly probable, but don't rely on it because it doesn't work all the time. That's why you want to keep other confluences in mind, right? Because that's not to say, it's indicating me, I'm just going to blindly get in here. This price could have just, if you got in here, this price could have went down to here, right? Like you have no idea. Like you could have bought heavy just because you had one, confirmation with the TTM squeeze, didn't look at the volume, didn't look at the EMAs, didn't look at the price action, didn't look at the stochastics, and you just got in only because of the TTM. You could lose a lot of money if you're being like really heavy. So always look for 3 confirmations. 3 confirmations is the golden rule. If it doesn't have 3 confirmations and 3 confluences to get into this trade, it is not an A+ setup. Don't get into a garbage setup because you're being eager and you're being impatient. Impatient does not make money. Impatience does not make money. I'm sorry to say, over trading does not make money. Taking garbage trades does not make money. Waiting and identifying correct A+ setups and taking and passing on, those B- setups, don't shortchange yourself. Just wait. and take A+ setups, because technically speaking, I could take 2 trades this entire week. Like truthfully, 2 trades this entire week. And if I can get a setup like this, like CRM did, and I can get a 5 to 10 to 20 to $30 move, that's my weekly goal, like right there. That's my profit target goal right there off that one trade. So you don't need to load yourself up with like, 10 trades a day or 20 trades a week. You can take 2 or 3 really potentially, highly A+ setups, and you could still make your profit targets every single day. Like, for example, just to use Trent as an example, Trent saw the push yesterday for I think it wasn't a Microsoft, Trent, and you bought a shit ton of contracts.
Yeah.
And he made his play. He made his weekly profits on one trade. It's like he could have been done the entire day off this one trade. So like you don't have to overtrade. You do not have to take a lot of trades. One banger a week is really all you need. Even if you get one banger and like one decent banger, you're still making your profit target and then some over the week. So hold on, let me answer another question. Why did you say Mara had to close above 52 to gap up, and if not, go down to 49? How did you know that it will gap up over 52? Let me look at it one more time for you. So if you look at it, it's respecting the 9 EMA, but underneath the 9 EMA, this puppy has really no support, right? Because the only real support it has here is when it respected off of the 50-70 region, but under that, it really doesn't have much support until right about 49.90. So it has to hold above the 52, which is right here. That, see, it's having trouble holding here because the sellers are taking it down. It's underneath the VWAP, and it's just having some trouble because, well, at least it filled its gap. That's a good thing. It had a gap. It filled it twice because this is the first time it filled its gap, and the second time it just respected the actual, support right here. So underneath this support of 50-70, which should be underneath the low of day. So underneath the low of day, the next profit target would be here at 49.90, and then under that you just play levels, right? The next area I have is 49.55, and then it's all the way down here to 48.71, because last time it came down in this region at 48.70, it rallied pretty hard right off that level and went right back to 50. So it's always good to know where your levels are and kind of just read levels. I'll look at Tesla just because why not? But give me a sec. So those are just my little tidbits about Mara. Because if you look at it, the buyers aren't that overwhelming right now. The stochastic is starting to cross downwards on the 2-hour time frame. So that's not really looking very great for Mara. So it has to hold 50-70 by the end of the day, or we could potentially gap down overnight and open back up at 49.90 or 49.55. So try to, if as long as it holds above 50-70, we should be okay. But start to get weary underneath of 50-70, and you could either day trade puts or potentially swing puts overnight. But just be careful because Coinbase is, with the IPO this week, crypto is kind of just being really wacky. So who's not to say Bitcoin cannot make another all-time high overnight. So just be careful with that, because Mara and Riot are very good in the longer term, within like a month, maybe 2 months. But the shorter term, they could be a little bit bearish because they have done decently well recently. Because like if you look at it, heavy uptrend, made a higher high, still made a higher high, made a higher high. So like it's still in an uptrend right here. It's just having trouble getting back over that 54.60 region. But once it's over that 54.60 region, we're going right back to all-time highs. The next true resistance is at all-time highs. And just look at Tesla just for shits and giggles. Yeah, yep. I can see that. I see that. Yeah, Tesla's just, also being bullish as heck today. I think Amazon was being bullish as heck as well today, weren't they? Yeah, a little bit. They had some problems over the 3430 region, but if you look at in the larger time frames, they have been uncontested for days, literal days. So it's not really a surprise that they had a tiny bit of a stall right here. And yeah, Tesla does not respect TA most of the times. Tesla is just a wild card. Amazon just kind of just has been moving the market just because it's been moving. They moved since basically last week 430 points. Just imagine swinging that for like a bi-weekly or 3 weeks out. You would have ate so heavy off this. Let's see how it looks on the TTM. So TTM. So it starts, the red dots are starting to squeeze right here, and then it actually truly fires around this region. But the red dots are starting to tell you right when it starts to move, actually. So on the daily time frame, right there. Okay. So notifies you right here that something's about to happen, starts becoming bullish. The TTM alerted you before the stochastics alerted you by actually about a week. About a week, they alerted you. Technically speaking, there was a little bit of a bearish undertone, but it didn't really go too hard. This was just kind of profit takers. Some profit takers right here, about $150 drop. Then it wicked really heavy, respected that 3,000 level, and pretty much ever since is off to the races. And it went $400, right? So the TTM started to tell you right when it was starting to turn bearish. So something was about to happen. Something actually happens right around here. And even if you got in for a day trade, that's still an 80 point, 90 point day trade just off these indicators and understanding that this is a reversal candle. So that would have been a great trade right there. But a full confirmation for like a swing and or like a full, heavy size was right here, where the EMAs are crossing, the stochastic is crossing, and the light blue is coming back into play, right? So you could have got in for a safer trade, probably over this resistance level of about 31120. Your first profit target would have been your old resistance right here at 3180. So the right there alone would have been a $60 move. And then if you didn't get faked out there, if you took some profits there, you could have still ran up. Next profit target would have been at 3250, and then didn't really have any issues until 3320. So it had zero issues until, so that's a large move without zero issues. It's a $200 move without issues. If you saw this on the TTM and the stochastics and the EMA crossing, right? So, and if you were still balls to the wall and held this, you would have been super rewarded, because there was really no sell signal. Like, it just pretty much rode the EMAs the entire way up. Like, I respected the 8 and the 21 the entire way up. This was the only time it had a teeny bit of issues and underneath the 8, but it respected the 21 perfectly fine, right? So if you saw these indicators and you use all these indicators to help with your confirmations and your confluences, you would have ate ridiculously heavy off of Amazon over the last basically 2 weeks. Like, it just went rampant recently. And if you saw these indicators and you use them to your advantage with coupling it with price action and understanding where specific demand zones and supply zones are, and using the EMA crosses kind of just as a crutch, like using all the indicators as a crutch for extra confluences while using price action primarily and understand supply and demand primarily. So in order of importance, it goes price action and supply and demand, which is a lot greater than extra confluences like TTM squeeze, stochastic, and EMAs. Sure, those are great, but those are just crutches, and you have to understand that they are crutches. What actually moves the market and what actually matters is traditional technical analysis, traditional supply and demand, and just understanding candles and how the market moves, because that is how the market moves: supply and demand, period. Nothing else will move the market. Supply and demand moves the market. And if you understand how supply and demand works, you are already ahead of a decent bit of traders that don't use supply and demand. They rely on only these levels, like support and resistance levels, and act like these levels are king. But that's not the case, because if you think about it, every person knows this. Like, this is just basic stuff. Like, support and resistance levels are basic for technical analysis. Hedge funds know it, retail knows it, everyone knows it. But retail doesn't use supply and demand very often. What moves the markets is hedge funds, and hedge funds play in supply and demand. They play in imbalance zones, and they capitalize on that, right? So if you play around big money, and if you play how big money plays, you are already beating out your fellow retail traders. So you kind of just have to have an edge in the market, and a really good edge to learn and understand is supply and demand trading. I'm gonna end it here unless we have any questions. I'll answer some questions quickly, and then I'm gonna end it here. But do you guys have a better understanding of TTM squeeze and stochastic after this session? Awesome. I'm glad I can help. Make sure there's no questions at all. If you have any questions or any concerns, please, don't feel hesitant to ask. And if you think of any questions afterwards, you can always DM me or just at me in the group. PLTR in 5 minutes. Sure, we'll do that real quick. So PLTR has been, well, let's see here on the daily. PLTR has been really downtrendy lately. And it's kind of just doing what it did beforehand, I think. So before the last demo day, it had a huge sell the news. And right after the demo day announcement, it had a large rally. So this is what it could be doing. It kind of just sold off, the last few days, sold off really heavy yesterday. And now it's kind of just bottoming out, found the support here at 2275 region. And as long as preferably this region holds up to 2350, we could see a solid push. We could see a solid push up to the back to the 25 region, and even potentially higher, because I think where's the last demo day? The last demo day did something like this. I think this is the last demo day, I believe. Pretty much just choppy, some sell off, demo day announcement, and then just over the next week or two, or not really the week or two, over the next really week, it kind of just rallied. So that could be potentially the case. I'm not going to say it's going to happen, but if we just follow history usually repeats itself. And I think PLTR has some decent news they want to drop tomorrow. So definitely keep PLTR on your radar. It's pretty extended at the current moment. So I'd wait for a little bit of a bounce, respecting probably, if you can find a bounce right here, right at the 2415 region, that would be a good swing. But at the current moment, I wouldn't really touch it right now until it touches 2450. Can you hold on? Is this your normal technical analysis setup? Do you have any other indicators that you prefer? So I have a few different setups. So this setup right here that I was charting on primarily is the VWAP. So it's basically just the VWAP, the 8 EMA, and the 21 EMA with stochastics and TTM. Now this one is pretty much just larger time frame stuff. So this is how I look at the overall picture. So it goes 8 EMA, 21 EMA, and then 89 EMA. 89 EMA is a pretty decent institutional level. Also, it's a Fibonacci level. So that's why I use it on the larger time frames. So this helps me kind of look for like swings and whatnot, and like to look at the bigger picture, because I'm not sure if you know how like the the TTM and Bollinger Bands work, but Bollinger Bands are basically like a visual representation of TTM squeeze, right? TTM squeeze and Bollinger Bands in a nutshell are pretty much the same, but Bollinger Bands shows it to you on the chart, whereas TTM shows it to you in an indicator. But like if you look at it, squeezing, which is basically the bands together, and then coming out of the squeeze is them contracting. This is the contraction right there. That's a squeeze being fired, and that's a squeeze about to happen. Just for a little tidbit about Bollinger Bands. But I use those, the 8, 21, and 89 EMA with Bollinger Bands. And then I use for like more of like a swingy, this is for day trading. And then I have primarily the exact same setup. I think it's, yeah, pretty much the same thing. But for this one, I have the 50 and the 200 moving average. So 200 moving average, 50 moving average. Then I have the VWAP, 8, 21. And then these are just more for like a little bit larger, 8, 21, and 89 with Bollinger Bands. I also use SMAs, which are slow moving averages. They are different from EMAs. So EMAs are more reactive for day trading and like smaller swings, whereas SMAs move slower. So those are very good for swing traders. If you are a swing trader, I'd recommend looking into SMAs or SMMAs. They move slower, so you get faked out a lot less. So just for a quick tip. Can you look at Tesla real fast? Sure, why not? Yeah, it's pretty heavy. So if you're in calls, oops, what the heck am I saying? Sorry about that. What am I doing? So yeah, there has weekly resistances and support. So it broke. So if you look at it real quick, so this beforehand was a weekly resistance level. It rejected it 2 times. Finally, it broke through it, but the buyers were not very heavy, so came right back down and then tried to break it again, broke it again, and finally the 4th time it broke through it and rallied heavy off of it and respected the EMAs the entire way up. So you could have a rejection basically right now when it's trying to do, or at 760, which is another resistance level. So that 741 is now a support weekly, 741 is now a support on a weekly basis, and 760 is a weekly resistance. And if it can break 760, look for 767. And if it still wants to be bullish as heck, 777, but I don't know if it's going to go that heavy, at the end of the day. But that is Tesla. Riot, would I swing Riot? Probably, just by looking at the price action. If it can hold even right here, that's fine. So as long as it can hold 57, I would swing Riot. PLTR, yeah, PLTR is also doing pretty well as well. If it can hold, if you're not in this trade yet, I'd either wait for a respected of the EMA down here again, or I'd wait for how it reacts off this 2450 region, because I've noticed the 2450 region is a relatively heavy resistance. So if you're not in this trade yet, don't jump into it just yet. See how it reacts to the 2450 region. And yeah, with Coinbase IPOing this week and Bitcoin just rallying to all-time highs, swinging both Riot and Mara on a monthly basis like even Mara is pretty good at this moment. Like if you pick up Mara anywhere from 51 to like 50, even 49, for a month out, like May 21st, you can, my profit target would be probably 58 just because of that, because of, Coinbase IPOing and crypto being more and more readily used. So, definitely don't sleep on these two stocks. Riot and Mara can definitely come back. Like Riot, for my profit target for Riot, it's right here, 68. So you can definitely see a decent move here. And also, what's this, guys? It's crossing right now. Crossing, volumes coming in on a daily. What's going to happen? Who's not to say, So just keep that in mind. Daily crossing of the stochastic and the indicators starting to turn from bearish to hopefully bullish. So if it can blow past 59, 15, next resistance is at 61.30, and then we go to all-time highs of 68. Yeah, I'm not really sure why Mara is dying when Riot's just going hardcore, but we can always just pick up Mara for a month out and pick up Riot on a potential retrace because it's been doing pretty well today. But yeah, I would definitely swing this as long as it can hold 57.25. Let me see if there's any other questions real quick, and if not, I'm going to end it here.
Thanks, Scrub.
Of course.
Great call. Great lesson.
Thanks. Appreciate you guys. Well, if there's no other questions here, I'm gonna end it here.
Right.
Appreciate you guys and thank you for listening. Would you ever adjust your 70-30? No, I do not adjust my stochastics. I use it. You can use 80-20. Anything from 70-30 or 80-20 is perfectly fine. But anything over that, don't change it. But anyway, I'm gonna hop off here. Good luck in your trading. Be safe in Power Hour. And thanks for listening. I hope you guys learned some stuff.